Where would I place the company considering taxes and the possibility to go public? So it depends. It depends, Chris, on where you are. If you are in a market that has established investment banking and stock exchanges, then I would think if you're thinking about the possibility of going public, and that's a whole different thing than we're talking about here. That comes to that would be in the exit area. But like if your company is in Europe, then you would be thinking about the London Stock Exchange, and it's got a couple of different levels that you would look at. The least hard to qualify for being AIM, and then there's a standard and a premium. Or some of the other stock exchanges, depending on where the company is located. You can do co-listings, or what they call dual listings, where you file in the public markets for the country that you're located in, wherever it might be in overseas, and then you also do a listing on the NASDAQ here. So there's a lot of different things to think about, so I wouldn't really worry about it right now. It's something that as you get what you'll probably find that you do is you'll complete your roll up, set up your SPV wherever you want to for tax purposes, or for the tax purposes. Though, if you're selling the SPV, it really extends up to how you hold it, because if you sell the SPV or the assets of the SPV and the taxes are coming through to you, then you want to think about how that works. Again, different subject than we're talking about here. We're just talking about how do we acquire these things in the first place. So it doesn't really matter is the answer to the question. Take a look at if you're going to operate the company from the SPV itself, you're going to acquire the assets, and then that's going to be the operating entity. It's probably easiest for that entity to be formed wherever the business is operating. But if it's just going to hold the assets as a holding company, hold the stock as a holding company in an already operating company, then it probably doesn't matter, because the company is where the company is already. So when you then get to the point where you're going to do the roll up, the people that you're working with on the when you get to the point where you're going to do the public offering, the people you're working with might have you reincorporate in a different jurisdiction. That happens a lot here in the United States. There'll be somebody that incorporates in California, and they'll say, we're going to do an IPO, so let's reincorporate in Delaware, because Delaware is an easier company to do public offerings with, because of all the rules that exist there. So so the answer is it probably doesn't matter at this point.